Hello, everybody. This is Brian Caprice. I'm going to be hosting our educational session this afternoon. I hope everybody's having a good day. I know the markets have been kind of up and down and a little bit flat, but again, with FOMC notes coming out right about now, I expect we'll see some explosions. So, what I want you guys to do is kind of make sure you guys have a drink, a pen, a paper, take some notes today. If you guys can, I'm more than willing to answer any questions you guys have. But if you hold your questions till the end, typically I may, it may actually get answered in a slide or two after your actual question goes off. So with that being said, let's jump in right away. I don't want to take anybody's time up. If you guys have other things to do this afternoon. Myself, I know I'll be shoveling some snow. I'm over on the East Coast. But again, it's a lot of fun when you have some kids that can come out and help you. So what we're here today to do is talk about what you can accomplish in 5 minutes and 5-minute binaries. Before we begin, I'm going to ask you guys a little bit of a polling question here. How many of you have actually traded the 5-minute binaries? If you guys look over here, I don't know if you can see my cursor, they're all the way at the bottom, right below the 20 minutes or the underlining, right above crypto and touch brackets. If you've traded these in the past, or whether it be live or demo, go ahead and say yes, or give me a number 1 inside of the chat box so I know what our audience looks like today. I know with my individual students, it was one of those things that they were down there, but not a lot of people, were really trading them or gave them much much of a look because they were, so focused on the indices and the currencies at the top. But once we kind of focused on the bottom section with what you could do with them, actually, I think majority of my students are actually trading 5-minute binaries now. So for those of you that don't know me, the information I believe was in the email, but my name is Brian Caprice, and I'm one of the founders of Major League Forex, and I also do some classes and course development for Major League Trading. Some of you may have been on my prior webinars. I've actually done, I was actually the creator of the 30-minute trader program, if you remember that. And I also did some articles for Nadex. If you guys aren't checking out the market news section, definitely go over and check those out. There's some great articles from other educators as well. You definitely want to keep up to date on those. So today what we're going to do is we're going to focus on 5-minute binaries. One of the biggest challenges, I'd say the 2 biggest challenges that people have when they're trading is basically time and money, okay? I know when I was really, really young, I had all the time in the world, but I just didn't have the money. And as you get older, people tend to get more of the money, but less of the time. So depending on where you are in that life cycle, maybe you have a lot of time and money, maybe you don't have either, but 5 minutes is something that can be carved out throughout the day. And this is a really, really great, product offering that Nadex has given us to be able to trade something like this. So with that being said, let's just kind of jump into the disclosures or disclaimers. I'll give you Nadex first, and then we'll cover the Major League Forex one. So trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument or on Nadex or elsewhere. Any trading decisions that are solely your responsibility. And as you guys have heard before, past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, which we're going to be talking about today, stock index futures, commodity futures, and economic events. Trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost of the transaction. Nadex is subject to U.S. regulatory insight by the CFTC. Now, very similar. Let me click here. There we go. Multiple screens, it's blinking around a bit. This is MLTs. It's very, very similar. Again, no representation is being made that the use of this strategy or any strategy or trading methodology will generate profits. As I mentioned before, past performance is not necessarily indicative of future results. Only risk capital should be used to trade. And what I mean by that, guys, is you should not be using your rent money, your milk money, even your Starbucks money. This should be, income that if you lose it, it doesn't affect your overall life. Trading securities is definitely not suitable for everybody. I would like to say that there is one product out there that everybody can trade, but unfortunately, that's not the reality of things. Not everybody is designed to trade. There are stresses and things like that not everybody's designed to handle. But for most people, you can typically find something that you are able to trade. And again, the past performance of any trading system or methodology is not necessarily indicative of future results. Keep that in mind. I can't tell you how frustrating it is as an educator to see people, out there talking about strategies that worked, 30 years ago, that don't even pertain to current market conditions, and people think they're getting something new. And again, just understand that you have to understand the trading environment that you're in and make sure that your strategy matches the current environments. Okay. All right. So let's see. With that being said, let's go over the agenda for today. So what I'm going to do first is I'm going to put 5 minutes into perspective. Okay. This is kind of a little bit of a fun session. I'd like to, before we really dive into the meat and potatoes of this today, we're gonna have a little bit of fun, and we're gonna talk about what happens in 5 minutes and what can happen in 5 minutes. Keep special attention to the last. I'm gonna give you guys kind of 5 examples of what happens in 5 minutes. Number 5 is extremely, extremely important. Like I said, if you have a notepad and a pen, do 1, 2, 3, 4. You don't have to necessarily worry about those, but number 5 is extremely important, and it's a hidden gem that a lot of people don't know. Next one is the ins and outs of the Nadex 5-minute binaries. Now, again, they are slightly different. If you guys are familiar with just regular kind of indice binaries, you may be familiar with expirations and the risk potential, or the risk and profit potential on each trade. But there is some things that are a little bit different about the 5-minute binary. So I'm going to dive into that so we kind of become well versed and, for lack of a better word, but become a master, right, at the ins and outs of the 5-minute binaries. Then I'm going to talk about crafting your strategy. Okay, I have a strategy that I use and I teach to my students, but there are various different ways that you can actually trade it. So I'm going to give you guys some pointers of how to craft your own strategy and what you really need to be successful with 5-minute binaries. Okay, and again, remember, this is entirely up to you. I'm not telling you guys that you have to do this one. I'm not even going to tell you which one's best or which one's the worst. You have to make all your trading decisions by yourself, and that's based off you as a person, your belief in the system that you're trading. So just keep that in mind. I'm also going to cover kind of things to watch out for. Best analogy I can come up with is kind of like a pothole, right? In any journey, if you're driving in a car and you're going down the street, you want to know where the potholes are, right? If you guys use some of those kind of automatic kind of charting thing, apps on your phone, right? Waze is one of them. It'll tell you where there's debris and things in the road. This is kind of what that section is for. If you can avoid those potholes, trust me, that will save you, a lot in your learning curve. A lot of times it's those stupid mistakes that get us. And if you can find those out and avoid those, more power to you. That's best case scenario. All right. So first section, get the notepad ready. Let's put 5 minutes into perspective so you can see what really happens. And again, you may be surprised by some of these. And like I said, there's a little comedy in here. The last one is the most serious one I want you guys to focus on. All right. Now, Abraham Lincoln, I'm sure everybody knows who Abraham Lincoln is. And Abraham Lincoln, one of his most well-known, and actually in the United States, one of the most well-known speeches that exists is Lincoln's Gettysburg Address. And in fact, it took less than 5 minutes to deliver the entire speech. And it's one of the most well-known speeches in the United States. It actually only had 271 words. You guys remember that 7 years ago? Yeah, this was at a memorial in Gettysburg for basically the first Union victory. But it took less than 5 minutes, and it's we considered one of the best speeches of all times. All right, again, less than 5 minutes. Okay, so a lot can happen. Napoleon. Okay, you guys, I'm pretty sure know who Napoleon is, right? He wrote the reason he beat the Austrians was because they didn't know the value of 5 minutes. And Napoleon was very big on time. He talked about when he lost at Waterloo, it was because the opposing armies fought 5 minutes longer than his troops did. So he was actually very, very focused on the 5-minute interval for some reason. But again, big general talking about 5 minutes, obviously there's got to be something to this. Now, babies. Everybody loves babies. If you guys know me or have heard me speak, I actually have an 8-month-old. She actually just went down for a nap. It was timed absolutely perfectly. I will pat myself on the back for that one. But 1,250 babies are born around the globe every 5 minutes. Again, 5 minutes is kind of a crazy thing here. Now, with babies, what also happens? Check this out. 60,000 gallons of wine are drank every 5 minutes in the world. Crazy, right? I mean, who would have ever guessed, right? 60,000 gallons. Now, these are the 4 kind of fun facts, guys. This is not going to make you a better trader by any means, that you know how much people drink and how many babies are born. But this next slide is actually rather important. And again, this is the one I want you to take notes on, okay? Now, this was an article, actually, this was an interview with Peter Costa on the closing bell. You guys know that what the closing bell is? Well, what he said was, I think it could almost border on 20% of the trading volume of the day is done in the last minute. In the last minute of the trading day. It becomes very, very important. Our firm has built a whole business around it. Think about that. He's saying that 20% of the volume occurs in the absolute last minute. I mean, we're talking about 5 minutes here in today's presentation, but 20% of the entire day's volume happens in the last. And if you guys look at the chart on the right-hand side, what it does is it talks about the intraday volume profiles of stocks and ETFs. And you can see 9:30 at the open, very, very high volume, right? Then you go all the way down, and on the other side, same thing. You see a very, very high volume with stocks and ETFs in the last 5 minutes. So this, again, this is broken into 5 minutes. Yeah, huge volume. So in 5 minutes, the market can move all over the place, okay? If you're a very, very busy person, think about it. Maybe you only could spend 20, 30 minutes at the end of the day, or maybe, you can look at the open, all right? Or maybe you can't do either of those two. Maybe you're going to be one of those people that can only trade during lunch or, when your lunch break is, okay? It's a lot easier to carve out 5 minutes or 10 minutes a day than you guys think it is, okay? I mean, trust me, I'm very, very busy. I have 2 kids. I have twin boys and I have a baby. And I'm a coach for 3 different teams for my sons, and I need 26 hours in the day basically to function for the most part. But it's a strategy for me and kind of an asset class that in 5 minutes I can go and spend 20, 25 minutes as the baby's sleeping or she's napping or mom's feeding her or something like that. So if trading is important to you guys, I definitely encourage you guys to look at these 5-minute binaries. There's plenty of movement. There's plenty of things you can do. I mean, even if you could just target the open and the close, there's a lot of potential in there for you guys to trade. Okay, so that's what this section was about. I want you to think about how many minutes a day. I mean, think about it. I mean, if you commute to work in the morning, how much time are you wasting sitting in that commute? I mean, if you're at work, I mean, think about it. In 1 hour, how many 5-minute, blocks do you actually zone out? You guys remember that movie Office Space? It was like, I really only do about 15 minutes of work every day. And the guys were like, you're management material, right? Think about it. 5 minutes is a lot of time to do that, all right? So that'll conclude this kind of putting the 5 minutes into perspective. And again, kind of some comedy. I want you guys to have fun with this. This shouldn't be all stress and all notes and all seriousness. But just, keep that in mind, all right? So let's talk about the ins and outs of the 5-minute binaries. Now, this is a pretty important section because there are some differences between 5-minute binaries and the regular kind of overnights that we're used to, even the 2-hour binaries. And that's for one of 2 reasons. One, because of the 5-minute duration, but also because it's foreign currencies. So that's a market that doesn't necessarily close at the end of the day. It is basically, open, the currency market opens Sunday night and follows all the way through till Friday. It's basically 5.5 days of trading, 24 hours a day. So the binaries are, besides the 5 to 6 p.m. when Nadex is closed, these binaries are running more or less the entire time. So a little bit different than the indices and the commodities and such, okay? So the 5-minute binaries are on currencies because, again, the market's 24 hours. I'm going to break this into 2 different sections, okay? This first section here is talking about 5-minute binary contracts that change depending on the time of day you're trading them, okay? Now, the euro dollar, the Aussie dollar, the dollar yen, and the pound dollar. These binaries open Sunday night. They open and close every 5 minutes. Basically, again, as I mentioned, there's no contracts between 5 and 6 because Nadex is closed. But from 6 p.m. Sunday night till 8:05 a.m. in the morning, there's going to be a spread differential. Okay, you guys all know what spread differentials are, right? If you look up here for contracts, you see how we go from 21 over here to 17 down to 13. Okay, you guys will see that these are 4 apart. Well, at nighttime, I don't know if you guys can see my cursor or not, but at nighttime in this bottom right-hand box, you'll see that during the hours that the markets are, typically slower, right? 6 p.m. to 8 a.m. and then noon to 5 p.m., the spread's only 2. But during the time from 8 a.m. Eastern to 12:05 p.m., the spread width would be 4 pips instead of 2. Now, again, if you look at this top section here, this example, this contract, right? These contracts up here are 4 pips apart. Well, of course they are. It's at 9:45 in the morning, okay? And again, remember, 9:45 would be between 8 and 12:05. Now, the interesting thing about this is we just talked about how there's a lot of movement at the very, very close of the market. Now, for me, I wish that the regular currencies binaries would not close at 3. I wish they would go later so we could, get that in the daily strikes. But you can do that with 5 minutes, right? I mean, during the really volatile time, especially between 3:30 and say 4 o'clock, you get a lot of movement. Guess what? We have a spread differential of 4 pips. I'm sorry, for 2 pips, right? So there's some cool advantages here, okay? Now, this is for these 4 currency pairs, okay? Understand the reason I'm covering this and this one first is because it can be confusing if you're thinking that it's going to be 2 and then it's 4 and then it switches and it's like, oh my God, wait a second. I was doing this last night and it was 2. Now it's 4. And, don't, there's no reason to lump any stress on yourself about doing this. Just, focus on, kind of what the easy is. And my recommendation is if this is something you're going to try to do it the same time every day. Try to be consistent with it. If you're going to consistently try to do this, and craft your strategy at night, then do it at night with the 2 pips. If you're going to do it more during the day and the more volatile time, during the morning, then do that consistently. And that's how you get better, is kind of keeping that consistency down. Again, you don't want to confuse yourself. Now, this is where it gets confusing. Here's the other three that are included in the 5-minute binaries. Now here we have the US Canadian dollar, we have the pound yen, the beast, or we have the euro yen, okay? Now, here's where these are different. Instead of being 2 and 4, the strike width of these are going to be 5 pips no matter what, okay? Now, if you're unfamiliar with currencies, again, look at this bottom kind of bullet line here. It says the strike width is 0.05 pips in yen pairs, because yen pairs are priced slightly differently. And then obviously in the Canadian pair, it's 4 decimal places. And again, decimal places, that's a currency thing, based off of what an actual pip is. If you're not sure what pips are or what these numbers mean, there are plenty of sites out there that can help with that. Baby pips. At the end, I'll give you guys a link. You can go to our website. But for the most part, if you want to keep this simple, stay out of the yen pairs. Go with the Canadian, or again, some of the other ones we talked about. Now, there are differences, and I'll show you the pros and cons a little bit later about the first 4, right? These 4, having 2 and 4 pips versus these. Okay, that will lead me into this kind of summary slide here. So here are the 7 pairs: Aussie dollar, euro dollar, pound dollar, dollar yen, euro yen, pound yen, dollar CAD. And I've kind of broken this down. So from 6 p.m. to 8 a.m., again, that overnight session, again, it doesn't matter where you are, this would be overnight. You can see that we have the 2 pip spreads, or we have the 5s. Again, looking at the kind of noon to 5 p.m., it carries over. It's exactly the same as the overnight. It's 2 and 5. Then we have the strike width between kind of the chaotic times, right, where all the news releases are, and it's 4 pips and 5 pips for the respective pairs. Now, the reason why I'm bringing this up into one chart is the last 2 categories over here, okay? One of the things that I want you guys to take into consideration is what the ATR, or the average true range, is, okay? Now, the reason why we're looking at this, let's look at, say, this first line where we have the Aussie dollar, okay? The 1-minute ATR, and again, these are taken at about noon. They will kind of change throughout the day, but the ATR is about 1, right? On the 5-minute, it's about 2, so it's not a really, really big mover at noon, okay? Hence why we have smaller strikes. Now, in the morning, obviously, it's a little bit more. Now, look down at something like the pound dollar, the third one. Again, this is still 2 and 4. It's the same as the Aussie dollar, but what is the actual movement? What is the ATR during that time period? Okay, now it's 3 and 10. Okay, you guys see a difference? And these are things that you have to take into consideration. And we'll talk about at the money or out of the money binaries later, and kind of what the pros and cons of those are. But this is one of the steps that you got to take into consideration. What is the moving potential during that time period? Okay. I mean, if you're looking at 1 and 2 and you're doing an out of the money binary that needs to move 4 pips, what's the percent, what does it look like? I mean, what are your percentages of how much that's going to move when, again, these are just averages. It can obviously move as much as it wants, but this is what the average movement period is during that time period. And again, if you're putting yourself 3 or 4 pips down in 5 minutes, again, you got to start looking at probabilities. But again, something like the pound dollar that moves more, okay, just food for thought. Keep that in the back of your mind when you're trying to establish which one would be best for your trading style. And same thing, if you look at something like the dollar yen, right? You see 1 and 3, okay, but then you see the pound dollar down here, right? 3 and 12. It's like, well, wait, that looks great. I love that one. 12, man, all I got to do is just pick this direction, and I'm golden. Well, yeah, that's your thinking is correct, but also realize, having to move 12, a 5-minute ATR of 12 pips, but the strike width is 5 pips. You got to cover more ground to cover more strikes than you do in one of these smaller, say, euro dollar, pound dollar. Okay, so I'm not against you guys screenshotting it, or if you guys want to take notes on this one, or you guys can come up with this data yourself. But this would be one of those things I'd want to write down when, I get asked this question a million times. Which one's best to trade? Which one's best, Brian? Well, again, a lot of that falls back to you. What time of day you're trading it? What are the ATRs during that time frame? Okay. And again, you may have certain pairs that you know a little bit better than others. My wife is Canadian, so for me, I do like the dollar CAD a lot, even though the dollar CAD has the same kind of ATR values as the euro dollar, but the euro dollar I need to move less. But during kind of news time, it's 1 pip different, and that's something that I'm okay with. Okay, like I said, everybody's risk is a little bit different, and I always get, well, what do you do? And my response is pretty easy. You're not me. You're not going to trade like me. We need to help craft this strategy for what you're good at, what you can see, and what your risk tolerances are. Okay. All right. So let's talk about crafting your strategy now. Okay. So there's 3 tools that you need to have to be able to create a strategy to trade 5-minute binaries successfully. And I'm not making any guarantees. That's not what I'm saying. But what I'm saying is for you to create your strategy and tweak it and have all the components in there to get in there to have a reasonable shot, there's 3 things that you need to do. One, you need to be able to uncover the trend. Without the trend, you don't stand a chance in doing well with these. If you're just guessing, that's not what trading is about. Just save your money. Just don't do it. Okay. If you have a plan, the first thing you need to do is uncover trend. Okay. The next thing you need to do is come up with entry and exit rules. Obviously, are you going to hold it till expiration? Are you going to get out early? Are you able to get out early? I mean, there's a lot of things you got to think about. And the third one is money management. Okay. Money management is probably the single most important thing in trading. I mean, some of the biggest traders in the world, it's interesting. They'll actually take more numerical losses, but their losses are so tiny. They're like pennies on the dollar, but then their winners are huge. And, at the end of the day, their accounts are green. I mean, that's what big, large, traders are doing. So money management is one of those things that people don't talk about, but is so vitally important to any trading strategy, not just 5-minute binaries. Okay. Now, what is a trending market? Let's just start off with the basics here. Okay. A trending market is a market that is trending in a specific direction. Okay. Markets can be bullish, bearish, or they can be sideways. Now, I'm going to say this right off the bat. If we are in a sideways market, you should not be trading 5-minute binaries. Okay. Because you do need movement. I know some of you may have traditional options background, and you may know that sideways markets are great if you're going to trade something like calendars. Well, in 5-minute binaries, we're not going to get too complicated with it because we only have 5 minutes. We have to enter, we have to exit. We're really looking for bullish or bearish trending markets. Okay. Again, you should know what those are. This picture that's had a big kind of an uptrend, and then it had a very long extended downtrend. Okay. And now we're basically sitting in a sideways market if you're looking at this chart. Not really the best thing to trade 5-minute binaries if we're in that sideways, but the trend up, trend down, were absolutely great times. Okay. So these are a list of trend/trend reversal indicators. Now, you may like some of them, you may not like them. Moving averages, there's SMAs, there's EMAs. Many of you have probably heard of MACD. I will warn you, MACD is probably the most overused and least understood indicator that exists. Many people know that it stands for the moving average convergence divergence, but they don't actually know what it's meant to show you. And more importantly, they don't know the formula. Okay. For years, I've been in this arena for not trading, but educating for probably 10, 12 years now. And I used to present multiple times a week. And the one thing that I would ask every single time is, how many people know what the MACD is? That's the best, right? And, everybody would raise their hands. I'm like, okay, how many people can tell me the formula that's used to, create the MACD? And I went the whole thing, not just the moving average part of it. And I think in 10 years, less than 5 people were able to tell me what the actual formula was. So they were using a tool and thinking that this tool was the best and didn't fully know how to use it. They didn't really understand what it was meant to show. You can use parabolic SAR, typically for reversals, or that's an easy one. You can use stochastics for, oversold, overbought areas. RSI is another one that will show you trend strength. That's a great one for this. I actually am a very big believer in RSI, particularly, think about it like a train, right? When things get, a train is moving, it picks up more power, and it takes a little bit longer to slow down, right? Again, it takes a while to start, but once you get that thing rolling, for currencies, it may be an hour, 2 hour, 3 hour, 5 hour, long trend. I mean, we're talking about 5-minute intervals here, right? I mean, those would be great if you can get into like a 3 or 4 hour downtrend. I mean, there's a lot of 5-minute contracts in that time frame. You can use the average directional index. Again, that's for trend strength. It doesn't show direction. You can use candlestick patterns. I mean, there are many, many cool candlestick patterns, and even support and resistance. If you guys are familiar with support and resistance, or supply and demand theory, these are all different types of trend and trend reversal indicators. Now, I'm not going to tell you one's better or one's worse, only because some of you may be more technical based people and you really, really like the complicated formulas, or maybe you're like me. I'm a big believer in the KISS mentality, right? The keep it simple, silly. It's not silly, but you guys know what I'm talking about. You could use small things like an RSI, and what I recommend is find one of these indicators that you like to help you determine where trend is, what trend direction is. Okay. Then what I would do is I would combine this with something maybe for trend strength, or something like a support and resistance. But I wouldn't pick more than 2. I would say keep this simple. You could put all 8 of these up there, but you're going to get conflicting signals. And by the time you can do all your analysis, the 5 minutes has already passed and you're on to something else. you want to be quick at this. Your analysis typically has to be fast because when you enter the trade also matters as well. So again, you can mix these up. You can do an SMA. You can do, compare SMAs with candlesticks. You can do MACD with support and resistance. Because again, if you're at an area of support and resistance, do you really want to be going, in that direction? I mean, think about it. Got a big area of sellers right here. Do I want to be buying into a big area of sellers? Probably not, right? It just lowers the odds in your favor. So keep this in mind. Again, you can write these down. You can screenshot this if you want. You may have other indicators that I don't have up here. There's absolutely tons more indicators out there that can do this for you. But again, I wanted to give you the idea of this is kind of what you're, again, this is one of the important aspect of it. All right. All right. So let's talk about the entry and exit rules now. Now, entry and exit rules are based off your personal risk appetite, and once chosen, you should use them consistently. Okay. What I mean by that is, don't go in and say, I'm going to use the out of the money and I'm going to take profit when I double my money. And then after 5 trades, you're going to mix it up and try something else. Okay. You cannot do that. Okay. They say that you need to do something 30 times to be able to have something, to have a result that is statistically significant. And you should, whatever you pick or wherever you decide in the beginning, okay, again, you can do it in demo, do 30 trades and then go back and analyze your results and figure that out. Now, what do I mean by that? Okay. Let's talk about the 2 different options of how you can get into trades. All right. Now, you can use at the money, basically meaning if the strike says that it's at, 114.50, right? Or I guess actually 114.60 would be the strike. At the money would mean you're right there. Okay. Not, you're not 114.70 or 114.50 or 40. You're right at the money. Okay. You're right where the strike is. Now, the pros of that are you need very, very small pip movement, right? To get to the target. For Nadex, when you guys get into these things, as you know, whatever your purchase price of the option is, that's your maximum risk, right? Okay, you can't lose more than what the actual buy-in entry is. And the other side is what your potential profit is. So if you're already at the money, right, if it just moves maybe 1 or 2 pips, as long as you're above the strike, you're able to receive the full payout at expiration. Okay, so not as much pip movement, okay? If you're not as strong as trend, this may be a better option. Now, the cons of this one is it's higher risk. Now, why would it be higher risk? Well, it's higher risk because if it moves against you 1 or 2 pips, again, it's gonna hurt a little bit more, right? I mean, the other piece is, your risk to reward ratio is probably, at best it's going to be 1-to-1 because if you're buying into an at the money binary option at Nadex, you're going to spend approximately $50. So the way that the binary option works is that there's only $100 maximum in each option. If you're buying in for 50, you can only take 50 out, okay? And typically you're gonna have to hold these till expiration because there is time value, there is premium value. To be able to get that full payout, you gotta go till expiration. That's the only way to do it, okay? Now, the other option is for your entry and exits are using out of the money, okay? Now, these would be smaller risk monetary-wise because if, say you're using a strike that's 1 or 2 strikes lower, you may be risking, say, $15 to $22 or $25, I guess, in that range. Well, in that case, you have a much higher risk to reward ratio than 1-to-1, right? I mean, you could take it at 1-to-1. I mean, if your buy-in was $20, you could take it off when it's worth 40. I mean, actually, in that case, the price would not even be at the actual strike price yet. Okay, it gives you the ability to kind of get a larger risk to reward ratio. I mean, think about it. If your buy-in is $20 and you needed to move 4 pips and it moves 8 pips in your direction, and you held this till expiration, which is obviously less than 5 minutes because you bought into it, right? After it already opened, you risked 20 to, and then, on the other side, you made 80. That's a 4-to-1 risk to reward ratio. That's great. And I'll talk about that in a second. So you tend to have a higher payout based off of what your initial entry is when you're using out of the money. Now, it does not need to be held to expiration, as I mentioned. Like I said, if you're, the best money management guidelines, if you're using an at the money would not be to buy in for 50 and then take it off at a $5 profit. In that case, you're going to have to be right a whole lot to be profitable, right? Because one loser in that case would really drain your bank, the bank account. Using it out of the money, if you bought in for 20, you could take it off at 40, a 1-to-1. You could take it off at 50 or 60 or 70, all the way up till expiration where you could get $80 out of that one based off the $100 yes or all or nothing type structure of the binary. So it gives you a little bit more options. Now the cons, it does require larger movement. As we mentioned, the at the money, you only got to move a small amount. out of the money, you got to move larger, okay? It also requires you to be better at trends. You need to have stronger trends. If you have a weak trend, it may kind of whipsaw back on you. It's very, very frustrating when, say you need to cover 6 pips or 7 pips, right, based off your entry. And you're like, yes, 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 I'm there, but it's more of a sideways where it whips back a little bit right before the expiration. Very frustrating, right? So you do need to have a little bit stronger trend analysis skills to be doing the out of the monies. They are more profitable. They are more fun when you get the movement. But something like in the middle of the day at lunch when things aren't moving, and this is where you got to kind of make a determination what is better for your individual situation, okay, whether it be at the money or out of the money. Me personally, I will actually trade both of these depending on the time of day and depending on the volatility situation. There's some great websites out there that have volatility heat maps that can let you know really what's moving right now and what's upcoming. And again, I'll cover that kind of in the pothole section. But again, it doesn't mean you can't trade these. But if you're a beginner to 5-minute binaries, these are the things that I would focus on. Do it 30 times before you start mixing it up. Okay. All right. So with that being said, let's talk about the money management. Now, entry and exit rules are based off your risk. Again, once chosen, should be done consistently. Money management is the exact same thing, and I'm using the same thing here. It says entry and exit rules for a reason. Money management is also based off your entry and exit. You're opening yourselves up to risk to reward ratios. And again, that's important. So let's look at an actual contract here so we can talk about this. So this is just a screenshot from February 4th, right? Can't believe it's 2019. And this is about what, 26 seconds after the binary printed. Okay. Now this is labeling out the 5 different strikes. You can see that this was at 9:25. So the euro, it has that 4 pip, right? The 14.45 to 14.41. There's 4 pip difference that we need to overcome here. Now, if we look at this strike right here, now this would be the at the money, right? The indicative value is 114.369, and the strike is 114.37. Okay, so we are at the money. Actually, let me see something here. There we go. Now you guys can see a little bit. I forgot that I had this option on here. Okay, so follow the red dot. So 114.36.7, and the strike is here. So this is the at the money. Remember I said it's about, again, about $50, right? Now, where's the click? I have to take it off if I do that. Okay. So if we were buying this at the money, I just want to label it out for you. The risk if we were buying this is 57.75, right? Meaning at expiration, the maximum payout we can make on this one is $42.25. So the risk to reward ratio is 1 to 0.73. Now, one of the pros about this one is because where the indicative value is right now, we are actually already in the money by 0.0001, a fraction of a pip, right? So we have a tiny, tiny required move. It's just, actually, I'm sorry, it's not out of the, it's technically out of the money by that, right? So if it moves 0.0002, right, 0.2 of a pip, very, very small, it just needs to go above 114.37. So if it gets to 113.37 and then a 1 in this last digit, you have your full payout. So it needs to move a very, very small, tiny amount. And if you remember back when we looked at the euro, right, we talked about the euro actually at noon, but at noon it was 1 and 3, right, the 1 minute and the 5 minute ATR. At 9:30, it's typically about 3 and probably 5 or 6, depending on the day. So if you need to move a fraction of 1 pip, right, the chances are, pretty good that if you chose, if you were able to decipher trend, the chances of this one becoming profitable are probably pretty good. Okay. Now, in comparison to that, let's look at if we shorted this. Okay. Now, again, this is at the money, right? At the money, we'd be risking $44.50. Okay. Meaning the maximum payout is actually what we went into it for, right? We get $55. So the risk to reward ratio in this one is 1.25. Now, this is a better risk to reward ratio. And in this case, right, the required move is 0 because price is actually already below the strike. Okay, so in this case, we need 0 movement. If it does nothing for 5 minutes, which obviously that's very, very rare, but if this does nothing for 5 minutes, boom, you hit your payout. You risk $44.50. Your maximum payout was $55.50 in 5 minutes. Okay, and that's why I love these, because if you're sitting there based off, and then again, this is one contract, guys. Okay, one contract, $55. There's dinner for you and your wife, right? With no movement. Or if it goes down in your direction, it just continues to go farther down, 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 down. Okay, this is why it's so important. I'm sure you guys can see how, if you're determining trend and you have downtrend, you got to love these type of things, right? Again, during the day, 1-to-1 risk reward ratio is great. 1 to 1.25 is not bad. And again, this is at the money. Now, let's look at out of the money. Remember, I said these require a little bit more movement, but the risk reward payouts are tend to be a little bit better at expiration if you hold them out long. Okay, so let's look at these two strikes now. Let me do the highlighter again real fast. You see up here, this is if we're buying, it's going to cost us $9.75, right? And vice versa, if we're going to sell it, it's going to cost us, again, the same $9.75 in the other direction, okay? Now, let's get rid of that. Okay, so if you were going to go long, right, it's going to cost you $9.75. If price moves and closes above that strike at expiration, you will make $92.25, okay? That's a 1 to 9.46 risk to reward ratio, which is awesome. It's great, right? I love those. If you could hit 9 to 1s, you're going to be a very, very happy person. Now, it does require a 4.2, basically a 4.2 pip move, right? It needs to get up to, because this strike is the 114.41, it needs to go to be greater than that. So we need to move 4 pips, right? Because the indicative value is 114.36.9, okay? And we need to get to 114.43, 41, right? So we need a 4 pip movement, and again, the 5-minute ATR during this time frame is about 5 or 6. So as long as you determine the trend was up, if you took this over, wonderful trade, $92. Now you can take you, your wife, and maybe one of your kids or two, depending on where you go, to the movies, right? So let's look if you shorted this. Same risk, same payout. Actually, this risk reward ratio is wrong. It's the same as it is over here. This one didn't copy. My fault on the editing. Now, for this one, you do need a little bit of movement as well. You need just a little bit less. You need 1.00, basically less than, you basically need a 4 pip movement to the downside, but you can see, okay? More movement, but much, much higher payouts with the out of the money, okay? So again, this goes back to that kind of balancing kind of seesaw effect. If you're very good and we're in a very strong trending market, maybe you look to do out of the money binaries. On the flip side, if you're not as confident with trend and the markets aren't moving as much, maybe in that case, you go back and you look at these, the out of the money, or I'm sorry, the at the money, okay? Now, again, I'm not going to say one's better than the other. That's entirely up to you and what's going on in the market, but just be cautious of both. Again, the at the money are typically going to be anywhere from this 0.75 to 1.25 risk to reward ratios, and the out of the monies are typically going to be higher than that. Now, this is at expiration. Could you take this off sooner? Sure, right? I mean, if you're risking $9.75, if this moves 2 pips up and all of a sudden this is worth, you could sell this for 30, now you have a 1 to 3 risk to reward ratio, right? This is an option that you don't have on the at the money side, but you do have it on this side. Okay, so again, just more considerations. Okay, now let's talk about the requirements to break even. All right, that's what I'm going to call this one. This is not saying if you set up the trade and you're looking at those and this is what your win rates are going to be. Basically, this is telling you what you need to get back to break even. Okay, if you're risking 1 to make 10, you only need to be right 9% of the time to be a break even trade in your account. Okay, if you're risking 1 to make 5, you only need to be right 17. If you focus on doing 1 to 3 trades, which are definitely still possible with the out of the monies, right? You only need to be right 25% of the time to break even. Meaning if you're right 26% of the times in your trade, you are going to be profitable, okay? A 1 to 2, basically meaning every time you risk 1, or you risk 1 to make 2, you need to be right 33% of the time. If you're a 1-to-1 trader, again, this is closer to that at the money. They're going to be somewhere around 1-to-1 or a little bit less. You need to be right 50% of the time in your movement. So again, if you can achieve above a higher than 50% win rate, again, because you're good at trends, then you can be profitable using 1-to-1s. If you're not as good, you tend to have a higher, you'll have a lower win rate. You need to have a higher risk to reward. Okay. So remember, this is hypothetical. This is theory right now. Okay. I am not saying that if you set up, just out of the monies and they're 1 to 5, that you're going to be right 7. I'm not saying that. I'm saying if this is the case, if this is what you're risking and this is what your rewards are, this is what it takes to get back to break even. And again, screenshot this one. You can find this online as well. But this is very, very handy, particularly when you're doing your trade setups, okay? Now, that's those things to watch out for, right? This proceed with caution, okay? I love this picture. I found this one caution falling cows. I'm not sure where this is at or what state it is, but pretty crazy stuff, right? Things to watch out for. News. Okay. If you were in a trending market and you're like, everything is going good, and all of a sudden a news release comes out, it's going to move all over the place, right? Just with the volatility of a larger news release, this thing is going to spike up, down 20, 30 pips in either direction. It's going to probably mess up your whole binary. It is what it is. So be very, very cautious of when news releases are coming out, or if a news release just came out, you may say, this is great, it's trending wonderfully well, and you try to get in 8:30 in the morning, and next thing you know, you're like, whoa, it just jumped 50 pips after I got in. What happened? Watch out for news, okay? Go to dailyfx.com. They have a news calendar up there. It'll tell you where everything is located. Market opens and closes. Something also important to look out for, you may be trading during a specific time frame. Like good example was, this week for President's Day, the U.S. was closed. Currencies were more or less flat. When after that European kind of close happened and there was like that push that disappeared, basically currencies just flatlined. Okay, so be cautious of when markets are opening and closing. You will get spikes and things like that as their traders are coming online or going offline. Just again, watch out for that. Again, DailyFX will have that on there. Sideways markets, again, we know if we're in a sideways market, just don't trade these. Watch larger time frame obstacles. Remember, support and resistance or supply and demand, depending on what you're looking at. Sometimes the larger time frames they kind of leave breadcrumbs as far as what we should be looking out for. Long-term analysis strategies as well. Again, looking at longer, examples like interest rates. Are things moving because of news? I mean, there's a lot of things that are more longer term based, would be the 5 main things. But when you're first starting these out, news, market openings and closings, and sideways markets would be the 3 main things. As you get more advanced, look at the larger time frame obstacles, and then also longer term analysis, where things are going in the long run. Is this near term trend just a pullback in a larger time frame? That type of analysis. So again, multiple time frame analysis is your friend. Okay. With that being said, that's kind of what I have as far as what you need today. As I mentioned before, the big things that you need to focus on are understanding the contract specifications. You need to focus on trend. You need to use those indicators we talked about. You need to make a determination whether at the money or out of the money are going to be better suited for you. Remember your risk to reward, what you need for break even. You want to make sure that you're focusing on the money management aspect of this. Again, the at the monies are great. You don't need much movement, but you do need a higher win rate. So again, it goes back to trend and your individual trading style. If you want more information from us, you can always go over to majorleagueforex.com. You guys see there's this Discord right here. We actually do 2 things. We have chart schools, but check out the Discord channel. If you guys aren't familiar with that. In Discord, there's more information on 5-minute binaries, what some of our students are doing. People are pretty sharey over there as well to what they're doing. So with that being said, I'll give you guys a little bit of time here for questions. We went a little bit past where I wanted to go to, but go ahead and type in the chat if you have any questions for me, and I'll answer anything that I can. Obviously time prevailing. If not, you can always head over to Major League Forex, get on Discord and shoot me messages over there. I'll give you guys a second to type anything, and I think, let me make sure I pull this out and see if you guys. Okay, yeah, there's a big list of questions all at one time. Hold on, I'm trying to make the window a little bit bigger for you. Looks like a lot of you have traded these in demo. Let's see.